Hello, this is Rob Carrig with Carrig Wealth Advisors. Welcome to our first quarter 2024 market update. We're going to start a new format going forward where we do an update every quarter, but then we also address one topic of interest. The topic today is going to be, is it too late to invest in stocks now that stocks are at all-time highs? Before I jump in, I do want to put out a quick thank you to all our clients. We have recently surpassed 400 million of assets under management, and we have our clients to thank for that, for letting us manage their money, but also making introductions to their friends and family members. So we appreciate that and hope that you keep those coming. So let me jump in here and look at some numbers. As always, it is courtesy of JP Morgan Asset Management. Okay. Here's our contact info. If I can be of help, rob.carrig@stewardpartners.com. First thing we're going to take a look at is just the S&P 500 for the first quarter of the year was up 10.6%. Source of this information is all down here. So obviously 10.6% for a quarter is a very good quarter. Last time we talked about how over a very long period of time, the S&P 500 had gone up at a little over 11% per year. So 10.6% in a quarter is obviously a great quarter. Bonds. Now, bonds were a little different story. First quarter of this year, the U.S. aggregate bond index was down, but just down 0.78%. So nothing insurmountable. We continue to work our way out of the very difficult bond market from 2022, which will take some time, but nowhere near how we did in stocks for the first quarter. I'm next going to go to this long-term chart. This is sort of my career in the stock market starting in 95. But focus on the last couple of years here, just to gain some perspective. So in 2022, at its worst, the S&P 500 was down about 25%, bottoming out October 12, 2022. And at this point in time, many investors, since they could get 4 or 5% in things like CDs and treasuries, and in some cases money markets, sold stocks. You know, some people a little bit, some people wholesale, and just said, you know, if I can get 4 to 5%, I'm not going to mess around with the stock market. Well, since then, the S&P is up 47% from the bottom to the end of March. So obviously, you know, if people can stick with it, in this case, the stock market has been rewarding for people that could just ride that out. A couple of things I want to point out here is even within this 47% rally, though, there was a very difficult period here last fall, and we had some challenging, you know, discussions with some clients at that point as well. But again, you know, I've yet to meet the client that is excited about losing money, but many clients are able to weather the ups and downs of the stock market. And those that could were generally well rewarded by riding things out. All right, so next slide. This slide, as you can see, is called Investing at All-Time Highs. Data, again, from, you know, FactSet, S&P 500, S&P rather, JP Morgan. And what they're saying here is from 1954, the percent of days where the S&P closes at all-time highs, 6.6% of the time, not that high. Percent of all-time highs that act as a market floor, they define that market floor is defined as an all-time high from which the market never fell more than 5%, almost 30%. So 30% of the time when the market's at all-time highs, it never goes meaningfully below that going forward. So that's a pretty big number. Let's look at this a different way. This data here is from 1988 forward, but the same type of thing. So we'll start over here with 1 year. If you invest on any day, any random day, 12 months later, on average, the S&P was up 11.9. Shouldn't be a surprise. Now, if you invest at an average all-time high, one of the all-time highs, 12 months later, the S&P was up 13.4%. So actually higher than any random day. Same thing goes for 2 years and for 3 years, where you actually are better off historically having invested at all-time highs as a starting point rather than just any given day. So to answer that question, is it too late to invest in stocks now that we're at close to all-time highs? Clearly, that's not the case. Again, for investors that can ride things out and stomach the volatility. All right. So that's it for today. I hope you enjoyed this. If we can help with anything, you can reach us at rob.carrig@stewardpartners.com or at, no, I don't know my phone number, 603-427-8855. Thank you and have a great day.